You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again to talk about all the crazy goings-on in the world of futures options. Yes, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are binging these days. I see the numbers. I see how many of you folks are coming in. Welcome to all of you, new and old. We love you all. Of course, if you like what you hear here on the on-demand side, all we ask is that you keep rating and reviewing. Clearly, it has an effect. Clearly, the new folks are grokking to all the new ratings and reviews out there. So if you like what you hear, keep rating and reviewing. And of course, if you want to go above and beyond, join the cool cats over there in the secret club. Get access to additional programs, giveaways, and of course, live access to whatever shows float your boat here on the network. Theoptionsinsider.com/pro is the place to go to begin that journey. And speaking of journeys, we have a fun journey through the world of futures options ahead of us. Let's see who's joining us on that journey today, holding down the CME Group and FTSE Russell hot seat today. Our old friend, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to TWIFO, sir. It has been too long.
Always happy to come on another epic sojourn on TWIFO.
We're full of them here on the network. A lot of epic sojourns today as we commence our journey, a little bit of the old movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, let us do it. Let us begin the journey. That is TWIFO, the way we are wont to do. Let's run the old movers and shakers report, see what's lighting things up to the light side, aka the upside, and to the dark side this week over there at CME Group. If you follow us, or if you follow CME on Twitter, we put it out right before showtime. That's one of the pretty much only ways you can get access to this report if you're not a premium Bantix user, which, by the way, if you're not kicking the tires and lighting the fires, over there at Bantix, BANTIX.com to see what else you can do with Quick Strike. I mean, we really just scratched the surface of it here on the show. You should definitely be doing that. Bantix.com is the place to begin that voyage. Uncle Mike, we need to begin our journey, so where should we begin this week? To the light side or to the dark side?
Dark side, baby.
That's a good choice this week because this chart is about, I want to say, 75 to 80% red. We could maybe, let's see, 1, 2, 3, 4, 5, 6, 7, 8. Yes, we can pretty much do a top 11 to the upside, and then that's it. There's no more green to be found. Everything else is red this week. So dark side is a good place to start. In fact, there's so much red, we may even extend it. Let's do it bottom 9, because why not? Because at number 9, we have our old friend, the E-mini Russell 2000, off nearly 4.5%. That would usually be enough to easily make it into our top or bottom 5, but this week, with so much dark side on the screen, it only makes it to number 9. By the way, the Russell 2000 last week was number 5 in the other direction. It was up 3.5%, so quite a couple of weeks of swings for the Russell 2000. Number 8, Mr. Uncle Mike. Another reason why we extended our gaze is a product you may or may not be familiar with. This is silver, off 5.03% this week. Number 7, we got Brent off 6.95%. It was number 2 in the same direction last week, off 8.36%. Number 6, we're not even in the bottom 5 yet. Number 6, one of our frequent offenders, just barely missing the bottom 5 this week. This is Bitcoin, off 6.95%. It was number 2 in the other direction last week, up 11.38%. Then number 5, we got good old Palladium, off 7.37%. Number 4, RBOB, so back to the energy. We went to metals and back to energy here, off 7.72% for RBOB. Last week, it was number 5 in the same direction, off 6%, so rough couple of weeks for RBOB. Number 3, the Eurodollar, off 7.81%. Numero due, it is WTI, off 8.58%. And number 1, back to the metals. Number 1 with a dark side bullet this week. Once again, we're talking copper, off 10.09%. Will we get base on the show today? I don't know. I guess you have to stay tuned to find out. Now to the light side we go, listeners. And we've got number 5, another frequent offender here. We got lean hogs back in action this week, up 1.43%. That's not a heck of a lot, but that's enough to break into the top 5 this week when pretty much everything else is red. It was number 4 in the same direction last week, up 3.73%. Number 4, we've got soybean oil. We've been talking a lot about the beans of late, the meal, the oil. This week it's the oil, up 4.48%. It was number 1 in the other direction last week, off 13.16%. Number 3, feeder cattle, up 4.49%. Numero due, soybean meal, up 5.81%. And number 1 with a bullet this week, another one of our frequent offenders, listeners, nat gas, up 7.35%. It was number 1 last week as well, up 12.72%. So you're talking nearly a 20% pop over the past couple of weeks. If you've been listening to the show for a little while, we were kind of wondering why the heck nat gas was taking it on the chin so aggressively. Last couple of weeks, reversing a bit of that trend. Uncle Mike, since we have nat gas number 1, RBOB's moving, WTI is moving, a lot of things are moving in the energy complex. What do you say we start there first?
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy. And let's make sure we can get Uncle Mike. I'm here in the chat. Can't hear you. Uncle Mike, can you give us a test 1, 2, sir?
Test 1, 2. Can you hear me?
I think it looks like the chat can hear you now. So that's good. We had to just make sure. Make sure they can hear the goodness. That is Uncle Mike. All right, Uncle Mike, we are hanging out in the energy sector now. So listeners, you guys know where to go to begin that journey. You're going to go over there to cmegroup.com/TWIFO, TWIFO/TWIO. This Week in Options also works as well. And then you're going to go into that asset class drop down. You're going to go 3 slots down to energy. Then we're going to over to product family. You're going to go 3 more down to natural gas. And we're going to kick off there to begin our journey. Mr. Uncle Mike, sir, natural gas, WTI, a lot of things lighting it up. What's catching your eye in the world of energy this week, sir?
Well, I'm looking at crude. I mean, it seems weird now that just a couple months ago that everyone was talking about how crude was going to go to 150, 160, and now it's not even at 100 anymore. So that's something that's catching my eye. And I think the lesson from this is that oftentimes people overreact initially. And I think that's the case in a lot of instances. And I think that's definitely been the case with oil. It's obviously pulled back because if we have all this inflation and we don't have all of this demand for goods and services and the world's going to end and everything's going to be awful like people are saying it's going to be, there's not going to be any need for oil. So it's going to be, if there's no need for oil, oil will go down. And just like it was in, I believe, the 20s or whatever it was during the COVID scare, it needs to have reason to be up at those levels that are so inflated. Now, I now also think that the scare of that we're going to have inflation, everything's going to be awful, I do think that's a little bit overdone, but that's just me. So if anything, I'd probably be a little bit bullish on oil at this point if I were an oil trader, which I am not. So oil is it's a very interesting thing because it's kind of a gauge on what's happening with the overall market right now, in that it had such a run up because everyone was scared of everything, Russia, inflation, et cetera, et cetera. But now maybe it's not going to happen. Now we have the other fear, and now no one wants to be in oil. So I think oil is, I would call oil the overreactive commodity of 2022 thus far.
It's hard to fault you. You could probably throw a few others in there as well. Nat gas has been pretty crazy. Other, crypto, you name it, lumber. There's been a lot of frequent offenders out there. But you certainly could do worse than lump energy and oil into that category. We're going to kick things off first because I have nat gas up here first. We're going to look at nat gas first. Then we'll dive into all things crude oil. How much action? How much is going on out here in good old nat gas? By the way, we're hanging out right now, listeners, at a 665 in that front future. And we're doing decent paper this week, about 440,000 contracts on the tape. So that's back to the kind of numbers we're used to expecting out here in nat gas again. And of that, 31% is going up in the August contract that has 12 days to go. So we can hang out there. It's within our frame of reference. Why not? It's just at the cusp of it. Intriguing stuff. I'm kind of getting distracted by some of the paper that's going up this week. We'll get to that in a second. Let's look first at what's going on out here. What's the vol this week back in nat gas? Well, we're popping again this week, so we're seeing the vol pop as well. It's up about 4.25 points, right around 87.5 right now. So if you're kind of wringing your hands with equities or some of the other major assets that you're trading, saying there's not enough vol for me out here, you're closing in on triple digits again out here in nat gas. So something to be aware of. We're higher even than Bitcoin and a lot of other assets out there right now. So intriguing stuff. Skew-wise, not a heck of a lot going on the puts this week. 1.6% cheap. Last week, about 1% bid this week. So 2.6% swing. I guess that's something, but not a ton. We have the calls coming in, though, pretty good. We have the calls were about 4.5% bid last week. This week, about 1% bid. So they've come in about 3.5 points on the call side. So interesting. A little bit more of a bid to the puts, a little bit less of a bid to the calls. And in terms of action, now this is what was distracting me earlier, listeners. We're hanging out at around a 665. So you'd expect some 7 calls, and those are trading. Even maybe some 10 calls. Those are certainly trading. Some 8s, those are trading. But the number one most active contract this week, Mr. Uncle Mike, we have the May 2023 2 puts. Yes, the 2 even puts. trading 20,000 plus times this week. They traded 9,900 times on Wednesday, 10,100 times today, total of 20,000, obviously, on both days exactly. Opening yesterday, we don't have yesterday's, or I should say today's numbers. A couple of hundred other traded on Tuesday, so a total of about 20,600 this week. I'm looking at some other strikes. I mean, there's a couple of hundred fours and three puts going up, but nothing that even remotely ties in for any sort of ratio or vertical. So, Uncle Mike, if I had to ask you the number one most active contract in NatGas this week, would you have said the May 2023 two even put, sir? That one certainly surprised me.
No, I would not have guessed that one just because of the fact that it's kind of makes me think of those Tesla puts that we talked about on the option block all the time. But there was a purpose for those. A lot of people are just hedging in case of bankruptcy because of their bond holdings, but would not have guessed the two puts at all.
I'm looking here, scrolling down to the May contract. The skew came in quite a bit. It came in about 3 points on the put wing, so potentially someone blasting away at those puts. I don't know, I'll have to dig into the blocks a little more to see exactly what was going on with those puts, listeners. But that one, bit of a curveball. That's what NatGas is good for, throwing you a curveball. When you think it's going to be all 7 calls all the time, they throw you 20,000 of the May 2 puts. Even on a normal, quiet end of spring, beginning of summer time frame like May is, 2 is pretty cheap. So it'd be interesting if they were buying those. That's probably a strike they were probably selling. The skew seems to be reinforcing that. I'm going to dig in a little bit more after the show to see if I can find out exactly what was going up. In terms of other contracts that make a little bit more sense, we've got the 7 calls going up out here in August, about almost 14,000 times. The big day today, nearly 6,000 today, about almost 4,000 on Wednesday, almost 4,000 again on Tuesday, 1,000 on Monday. So pretty active throughout the week, opening all week long. So we have folks kind of piling into the 7 calls all day this week, which makes sense. We've been rallying all week, getting closer to that 7 strike. Will we break it by expiration? Intriguing stuff here. The fact that, even though we did have the call wing coming in a little bit here this week, so maybe they were opening on the 7s and then taking off some 7.5s. So the 7.5s were also trading about 10,000 times this week. Those were opening all week long, too. So it could have been legging into some verticals. Either way, you have the call wing coming in a little bit, but a ton of 7s. So maybe folks are overriding the 7 strike as well. That's certainly possible. You're playing with a little bit more fire there. But given where we were just a couple of weeks ago, maybe you're not that uncomfortable dumping your natural gas at around 7 in the August expiration. We also have the 10 calls active this week. That sounds a little bit more optimistic. That's what you got there. The big day for those was Wednesday, 4,400 contracts, 3,500 today, 1,700 on Monday, just a few hundred on Tuesday. Closing on Wednesday, slightly opening on Monday, and we obviously don't know today's numbers. So intriguing stuff. I'm still kind of distracted by those 2 puts. So there we go, listeners. Weird stuff there. Since Uncle Mike was talking about WTI, I'm going to pop into there really quickly as well. Go pop out of NatGas, listeners. Go up 2 slots in the product family to crude oil. We're going to hang out there. How much paper is going up in WTI this week? My goodness, WTI is on fire. 806,000 contracts, so nearly double the amount of volume that's going up this week in NatGas. Wow. WTI coming into the start of the show about a little bit shy of 96.5, about 96.40. That's off about 8.4 handles, or about a little over 8, just a little under actually 8%, just since Monday's show. So a lot of that sell-off coming this week. We were talking about that on the option block recently as well. Folks are apparently washing their hands now of crude oil after bidding it up to high heaven. So it's been kind of interesting to watch this dance in WTI. Now let's see what's going on. Obviously a lot of paper this week. Let's see where the lion's share of this is coming. Oh, wow. Looks like in Dees, this probably accounts for a lot of this, paper, listeners. We have the 135 calls doing 84,000 contracts. Here we go. This accounts for all the madness, Uncle Mike, this week. So the 135s didn't trade at all this week in Dees until today. 134s didn't trade either. We have 84,000 of the 135s going up today in December. 84,000 of the 134s, also 63,000 of the 120 calls, and 60,000 of the 119 calls. So we have a 4-legged, 1 point wide on each of these. So, Mr. Uncle Mike, is that what you're expecting coming into WTI today? Having what looks like, about 300 plus thousand contracts going up in 1 point wide verticals, the 134, 135, and the 119, 120 in WTI, sir. Is that what's floating your boat out there today, sir?
Exactly. That's totally what I was looking at. That's exactly what's floating my boat.
All right. So to the rates we go, listeners.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the wonderful, the amazing, the deeply scintillating world of rates. You guys know where to go to find this in your drop-down, listeners. Go out of energy and go all the way down, almost to the bottom, to interest rates. And we're going to click on U.S. rates. And because I know where Uncle Mike likes to go, I think we're going to hang out in the 10-year note. So we're going to click on that. Uncle Mike, if I wanted to get on the boat with the 10-year note, what should I do? What's going on, sir?
Buy it.
Well, okay, that's it. That's the end of our rate segment, listeners. Buy it, says Uncle Mike.
No, what I would do with it, Mark, on a serious note, is that right now I own a lot of treasuries for my clients. And what we've been doing is just selling a lot of covered calls against them. And so, yes, the bonds have gone down this year, no doubt about it. There's been a sell-off in them. But one thing that is there that I think is undeniable, at least on the security side of it, where I live typically, is that there is a lot of premium right now in the 10-year note at the money. Just to kind of give you an idea of it, on the one that I'll help people with their IRAs, is that with IEF, the weekly straddle is almost at 1% right now, and in some cases more, on 7 to 10 year government treasuries, and that is a lot of juice. And so, yes, it's warranted because we've had a lot of movement in the 10-year note lately. But I think that if you're of the opinion that the 10-year note is near the bottom and you'd be fine owning it at a lower level, I think this is a dream time to sell puts if that's your sentiment. Just because there's so much premium there, and there's a lot more premium than there usually is in something that really doesn't move that much typically. So I am definitely a premium selling fan right now. Of course, it may not be appropriate for everybody, but that's kind of where I'm living right now in 10-year note land.
You're living the dream there, Mr. Uncle Mike. Let's see what the dream is over here. And the rates get into that 10-year complex listings. You'll see some paper going up here, 2.3 million contracts on the tape out here in the 10-year this week, listeners. And let's see, of that action, nearly half, 48%, going up in the September contract. Has about 43 days to go, so we could easily hang our hat out there. If you're wondering what is the vol right now in the 10-year note, it's 8.6. That's off nearly half a point, about 0.4 of a point this week. So it's coming in on already low levels, is coming in even more this week, listeners. In terms of skew, last week the puts are about 3.5% bid, so that's something. This week that has kind of vanished. They're back down to about 1% bid. The calls last week, 1.4% cheap. This week, about almost a full percent bid in the other direction. So a little bit of swing on the call side. The puts coming in a little bit. And of this massive paper palooza we were talking about, what's the big dog out here? That's why I love the rates. One contract can do 202,000 contracts. So we have the 121 calls here. These are in September, doing 202,800 contracts this week, listeners. The big day is today, 83,000 today, 57,000 on Monday, 40,000 on Wednesday, 21,000 on Tuesday, opening all week long. So folks were just piling in to these 121s. Not to be outdone, the 119 calls doing about 135,000 contracts this week. The big day, actually a tie. Today and Monday, both doing 58,000 contracts, 14,000 on Wednesday, and then just 3,500 on Tuesday. So a whole heck of a lot of nothing on Tuesday. Let's see. And then the 120s doing 107,000 contracts this week as well. The big day for those, Wednesday, nearly 50,000 on Wednesday, 30,000 today, 17,000 on Monday, 10,000 on Tuesday. Again, pretty much opening all week long for all these months, all these days, all these strikes here, opening pretty much every day this week. So a lot of action out here. What do we got? 200, that's talking 435,000 contracts just in the 121s, 119s, and 120s here in September. My goodness, I think the technical term is a lot of paper. Just in those three strikes, we've done as much as natural gas. 20x what's going up in like a silver. Wow, it's crazy town out there, listeners. So yeah, a lot of action in the 10 years. Let's see if we get outside of those big prints. We'll see what else we see out here. The other big print outside of that, we've got the 1 day to go week 3 July contract, 117 half puts. They did 62,000 contracts this week as well. So not everything in the rates, listeners, is going out in a few weeks or a few months. This is going out tomorrow. They were trading actively all week long. 21,000 today, 21,000 yesterday, 10,000 on Tuesday, 9,500 on Monday. Again, kind of opening all week long on these 117 half puts. So kind of pick your month, pick your strike. And there is size paper to be found here in these super crazy world of the 10-year note. Meanwhile, though, it is time for us to keep on rolling and explore the crazy world of equities. So let's get to it.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the crazy world of equities. You guys know where to go. Get into that drop down, pop out of the rates, and then we're going to go up a couple of slots to equity indices. We're going to hang out in the Russell 2000 first. It is one of our movers and shakers here this week. Before we dive into all that fun, let's set the table from an equity vol perspective. RVX, so the VIX of the Russell 2000, 31.5 when we kicked off the show, up about 0.6 of a point from this time last week. VIX, 27.25, up about 1.25 from this time last week. So we were hanging out at about a 26 this time last week, getting a little bit frothier as we were selling off earlier today. Seems like we're mitigating some of that sell-off now. In fact, the NASDAQ has gone positive on the day now after being, both of them, all the major indices being down nearly 2%. So quite a little bit of a rebound going on out there right now. VVIX, so the vol at about almost a 92. That's up nearly 7 points from this time last week. Vol Q, so the at-the-money vol of the NASDAQ 100, 32.40. That's up about 1.6 points from this time last week. That puts that VIX to RVX spread at about 422. That's about 1.25 points tighter than it was this time last week. And then the VIX to Vol Q, so the S&P 500 to NASDAQ vol spread at about a 520. That's about a third of a point wider than it was this time last week. Uncle Mike, a lot to unpack there. What's been lighting up your tape in the world of equities this week?
Well, I mean, I'm an S&P guy. That's what I'm typically looking at. I think right now with where we're at with equities, we're getting near the bottom again. Now, what's interesting today, in hindsight, I should have just bought everything with both hands this morning. My wife must have seen something on the news or something, but right as the market opened, my wife gives me a text saying, watch the stock market now if you're not looking at it already. And I'm thinking, okay, one of two things is happening, because I was in a meeting when I got that text. Either number one, a war broke out, or number two, we're kind of down and something on the news said something about whatever. And so I didn't get a chance. I haven't had a chance to talk to her about it yet today, but I think that we're just so jumpy right now with markets that it's like the most exciting channeling stock market the last month that I've ever seen, I think. And that we just kind of go up to around the low 3,900s in the S&P. We go back down to the 3,700s. Now we're going back up. I think we were down 70, 80 points earlier in the day today. Now we're back to around even. So it is very jumpy out there right now in S&P land, the land with which I live.
Jumpy is a good way to describe it, sir. Let's see how much jumping is going on out here in the Russell 2000. A lot of movement, not a lot of paper deriving from that. We're at about a 1708 when we kicked off the show. That's off about 60 handles, or about 3.5%. Just this week for the Russell 2000, of course, wait 5 minutes. We're going to see a different level out there as the equities are kind of moving around a lot today. even though we're hanging at 1,700 puts are trading today, but it's actually the 1860 calls, the week 4 July contract that has about a little over a week to go. That one has done almost 500 contracts this week. So that's kind of the most active thing we're seeing out here, which is kind of interesting. 1860. I wouldn't have predicted that. That's not what you usually see out here, but that's kind of what's lighting up the tape out here this week. Let's just look really quickly, see if anything else weird is going on out here. We got the week 3 August. Looks like we've got the 1,600 puts trading this week as well. That's kind of more along the lines of what we're used to seeing out here in the Russell 2000. A little bit farther out and a little bit farther out of the money puts. That's kind of normal. And then some near-dated upside calls. The fact that they're going out a little bit for those 1860s. That's just a strange level, strange strike. All sorts of strangeness going on with that one as well. You know, we haven't sunk our teeth into the S&P that often. And Uncle Mike is a big S&P guy out here. Let's go out to the E-mini S&P really quickly as well while we're hanging out in equities. S&P 3787 off 114 handles, or about 2.93% since Monday's session. And, you know, you don't need me to tell you what the most active thing is yet again in the S&P 500, listeners. It's week after week like clockwork. If you're wondering if they're still doing it, the answer is yes. Blasting away at these garbage puts that have a day to go. 3250 puts. So again, these are 500 plus handles out of the money puts. Have traded 72,000 times this week, 34,000 times yesterday, all opening, 37,000 times. Today I'm guessing probably more opening because they tend not to close these. And so just blasting away at garbage out of the money puts. That is still the number one trade out here in the S&P 500 today. We also see, or this week I should say, it also looks like we see about, we'll hold off on those. Instead, let's go a little bit farther out. 3475 puts going away in a few minutes. Those have traded about 40,000 times. Let's see, those are also, 300 plus handles out of the money. Again, it's so much garbage puts just obscuring everything here in the S&P list. That's why we don't get in here too often. It's just a lot. This is like when I first walked in the SPX and the SIBO many years ago. You see all these guys in the back of the pit just blasting away at garbage, what were then teeny puts. They're not a teeny anymore, but they're still going up for size. 22,000 times on Wednesday, 17,500 times today. You know, they're getting some juice for these, so I guess you can't fault them, but you're picking up the old literal nickels in front of the steamroller here. This is the kind of trade that you got to have a plan for in your back pocket for when it doesn't work out too well. And who knows, perhaps that day will be upon us post haste. If you want some weird trades, listeners, the 5,000 calls going up in August a couple thousand times this week as well. All sorts of weirdness on the tape here in the S&P, listeners. You know what? Let's just keep on rolling because this is a lot of weird puts dominating the tape out here this week. Instead, Mr. Uncle Mike, because you're joining us and because it is number 8 on, in fact, we have a ton of metals. We have palladium at number 5. We have silver at number 8. We have copper at number 1. I think we'll head out to the metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. You guys know where to go. For this portion of the show, go all the way down to the bottom of the asset class list. That'll get you to metals. I think we'll hang out in the precious first because Uncle Mike is a bit of a silver junkie. Mr. Uncle Mike, sir, what is lighting up your tape in the world of the shiny stuff this week, sir?
Well, with silver, I mean, I think the main thing to really mention right now in the metal world is that we just got this strong dollar right now. And with a strong dollar, it is difficult for the metals to increase. Silver's down right now. That's kind of where I live a lot of times, is what I trade, what I look at a lot. With silver where it is right now, it is below the 20 mark. And with it below the 20 mark, I think that now the new point of resistance is having to make sure it gets above 20. So there's a lot to do with it. But just the one thing with the metals is that I still hold to the fact that metals are kind of weird in that all of a sudden silver could be at $41 a share, or I'm sorry, per contract at any point in time. And so because of that, you need to respect large movements, especially in the metals. So That's what I'm looking at. And the thing I'm curious about is that every time I'm on this show, there's always some crazy out of the money gold call putting up thousands upon thousands of contracts. And the thing I look forward to is which gold contract is going to be the crazy one this week.
Well, we'll see if we can answer that question for you, Uncle Mike. First, let's do a quick sojourn out into your favorite, the werewolf's least favorite, that is silver, trading 1838 coming into the start of the show here, off 85 cents this week, or about 4.5%. So all you silver bulls who've been writing in, unfortunately, yet another rough week for you folks. Kind of a light week as well, only 14,500 contracts on the tape, so we're not going to spend too much time out here. Let's see, by the way, silver vol right now, hanging right around a low 30s in these front contracts. Of that low amount of paper, 30% of it went up in the August contract that has 12 days to go. The vol out there is about 29.5, so just right below 30. In terms of the most active contract here in silver, not a heck of a lot, listeners. 18 quarter calls going out in about a day. These have 354 contracts. I guess that's the most. Oh, no, here we go. 18 quarter calls in August. They did a whopping 501 this week. That is the most active. All of that today, nothing else the rest of the week. So we have no idea if it's opening or closing or not. So there you go. 18 quarters, actually kind of the contract du jour out here this week, listener. That's kind of interesting. So Uncle Mike asked about gold. We'll do a quick sojourn out to gold as well before we get a little base, because that is our number one dark side mover and shaker out here, copper. Let's go out to gold. Gold doing a little bit more paper this week, 147,000 contracts, so a little bit more respectable this week. Gold at a 1709 when we kicked off the show, down about 33 handles or nearly 2% on the week. Gold vol hanging out in the 16 to 17 range, depending on where you're looking on the term structure. Some of them get up to almost 18 out here. Looks like of that paper, 31% going in the AUG contract has about 12 days to go. The vol out there is 16 and a quarter, up about a third of a point. In terms of action, looks like the big dog in gold, the 1700 puts doing 4,300 contracts. Actually, take it back. The 1875 calls in October doing 5,100 contracts. So that qualifies as some not quite as long term as we're used to seeing, and not quite that out of the money, but it's something. Looks like 1875, 1800, 19.5 fly went up. So they did it 2,500 times on the 1800s, and then 2,500 times on the 19.5s, and then they did it right in the middle, 1 by 2 by 1, 5,000 of the 1875. So there you go, Uncle Mike. You got a 1800, 1875, 19.5 butterfly going up, and then let's see, we got some other funky strikes going up a little bit farther down here as well. See if we can find some other funk for you. How about the 2000s going up in March of next year? Those just traded straight up. The 2000s trading 3,500 times this week, pretty much every day. The big day was today, 2,600, but they've traded for opening every day this week. So Uncle Mike, what do you prefer? That funky 75-point fly, 2,500 by 5,000 times, or the 2000s going up here in March of next year about 3,500 times, sir?
Well, for purpose of the show, I like the 2000. If we wouldn't have had some type of a gold out-of-the-money call of some sort on here, I would have just hung up right on the spot. I mean, I can't do the show without it. But in terms of as a trader, I think I like the fly a little better if I were to do something like that. It's still kind of a, how can we put this, speculative trade, I would say. But nonetheless, a lot of times if I were to prefer something speculative, I usually prefer a butterfly over a single leg.
All right, and we have copper bringing up the rear here. Number one in our dark side movers and shakers this week, so and then selling off about 8.1% just since Monday's session, about 30 cents, trading around 323 right now. Copper's been putting up some numbers of late. This is one of the weeks where it's not doing a ton, 13,400, so actually less paper than silver for copper this week, which these days is actually a bit of a rarity. And of that, about nearly 50% of that paper going up again in the, this is the August contract that has 12 days to go. So we're going to hang out there really quickly. The big dog out here, the copper, by the way, the vol is 40 and a quarter, up 5.3 points. So a little bit more frothy from a vol perspective than your other metals out there. Again, to find this, listeners, you're going to pop out of the precious metals and go down to the base metals. And then 3.5 calls seem to be where the action was this week, trading about 1,200 times. That's pretty much the lion's share of the paper. You're only doing about 13,400 contracts. So copper, not exactly blowing the doors off out here. Let's see if instead, listeners, you guys can blow your doors off with some of your questions. It's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. We like to get your pulse on a lot of different things. We usually get your pulse as well on our questions of the week. Last week, we were talking about this question, which was an interesting one, especially for this show, because we touch on so many different asset classes. We asked you, which asset class do you feel has the best chance to turn positive by the end of the year? And you guys ended up piling into equities. 45.2% of you said equities where you had the best chance of turning positive for the year. I guess if today's price action going from down 2% to pretty much unched is any indication, maybe we can. The rates number 2, 35.5%, and then bringing up the rear was crypto, only 16.1%, and then 3.2% of you voting for other. Mr. Uncle Mike, sir, what are your thoughts that about 45% of our audience piling into equity, saying they can go back to unched on the year, sir?
Well, I'm willing to bet that the rationale for our audience is that around this time of year in 2000, we were starting to come back with the equities coming back because they were down so much. And I'm willing to bet that a lot of the thinking, myself included, quite frankly, is that, well, we've come back from such a down point as recently as 2 years ago. Why not do it again? And so one thing in the last 15 years or so, pullbacks still happen in the market, but they seem to get resolved a lot quicker than what they used to. So I'm definitely a believer that it could happen by the end of the year, and it would not surprise me.
Well, as our resident bull, I would expect you to be on board with that result. Just a bit of a surprising one. I was kind of surprised. I thought maybe, given how weirdly rates have performed, I thought maybe they would take it. They came close, 35.5%, but not close enough to take the brass ring. This week's question, listener, is a little bit more tactical, shall we say. We're asking right now, if you had to spread your options trading wings, which spread with wings is finding its way into your trading arsenal? We were just talking about butterflies in gold. So we know you metals folks like yourselves a little bit of the old spreads with wings. We gave you 3 choices: the iron condor, the iron butterfly, the butterfly, or other. Uncle Mike, we were just talking about this on last show, so you have a little bit of an insight into this one. But, the votes are coming in. Maybe things have changed. Where do you think our audience is stacking up right now in terms of the iron condor, the iron fly, the traditional butterfly, or other?
I still think it's going to be the iron condor. I'm going to go with that one. I think that's where the audience is at. That is my prediction.
All right, and the audience is still there. It continues to drop. It's a little bit shy of 41% right now, 40.9% for the iron condor. It was almost 50% not too long ago. So some folks are coming in. Votes are coming in for the butterfly as well, 31.8% for number 2, 18.2% number 3 for the iron butterfly, and then 9.1% of you giving us other. You got to hit us. What is your other? I want to know what your other spread with wings is that you're doing. Maybe you're doing a funky ratio, a skip strike, something along those. Hit us up. We want to know. That's what the other is there for. We even say to it in the other listing, you are legally obligated to send us what your idea is if you choose other. All right, let's go out to the live chat before we get out of here. Nichols wants to know, Uncle Mike, why does Uncle Mike like silver more than gold right now?
Poor man's gold. That's the main reason for it. I've been waiting for a long, long time for some type of sudden thief of the night, so to speak, to come and raise silver to the highest of levels. And the thief hasn't come for a while, so I'm continuing to wait patiently. And I believe just the bang for the buck exists with silver more if and when that would happen.
Are you still in the epic, world-altering, content-shaping 2+ year collar, sir?
Yes, but the collar is now down to 6 months, so I'm waiting patiently through it, and it's kind of evolved into a vertical put spread that financed a long call.
Well, there you go. At least it did something for you at the end. The much ballyhooed 2-year collar. And that was actually probably more like 3 or 4 years ago now that I think you first put that on. So it's been a little while. You've been dallying in the old silver. So there you go, Nichols. It's more of just a, I guess, potential bang for your buck, paying for your upside play. He sees more of it in silver right now than gold. Do you guys agree, disagree? You guys have been hitting us up with a lot of silver questions lately. So I'm guessing there's more than a few silver bugs out there in the audience. But hit us up. Let us know where your loyalties lie in the precious or perhaps even the base metal spectrum. We don't judge here, whatever floats your boat. All right, and that's going to do it for us here on This Week in Futures Options. Uncle Mike, I want to thank you for taking time out of a busy market day to join us here to regale us with your thoughts on all things futures options. Before we go, I know you've been cranking out a lot of great content over there in the Uncle Mike content empire. If folks want to check it out for themselves, where should they go? What should they do?
Well, I try to put out about 1 new video per week on YouTube, so check out my YouTube channel. Just go to YouTube, type in St. Charles Wealth Management, and you'll find it. You can follow me on Twitter. I try to put out a lot of content through Twitter. Mike Tosaw, Tosaw. Or you can check out my website, stcharleswealth.com.
Check the man out, stcharleswealth.com. Give him a follow on the old Twitters as well, at Mike Tosaw. Speaking of which, I just noticed we had our 15-year Twitter anniversary yesterday. How freaking crazy is that? When we were putting all this stuff together here, when Options Insider was a brand spanking new entity, we thought we'd take a flyer on this fledgling little platform called Twitter. You know, no one had really heard about it. We just went out there and got it, and we were kind of lazy. We didn't want to type Options Insider all the time, so we just grabbed @options. And we had a little bit of foresight there, as it turned out. This Twitter thing has some legs to it, I think. Well, maybe not if you ask Elon Musk. It depends who you talk to. But still, intriguing stuff. So 15 years on the old Twitter. It's crazy how time flies when we're having fun. But it's because of all of you that we're still here doing it, still talking about great things like futures options. So we want to thank all of you. And, of course, you guys know where to go to check out more great futures options content. cmegroup.com/TWIFO, TWIFO. And, of course, you guys know where to go to check out all the latest in the world of small cap stocks and a whole bunch more. There's more than just small caps there. It's FTSERussell.com is the place to go. Give them a follow on the old Twitters as well, at FTSE Russell, all one word. On behalf of Uncle Mike and everybody over there in FTSE Russell land and CME land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening to us and reading our tweets for the past 15 plus years. Thanks to all of you. We love you all. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. After that, for all you cool kids in Secret Club, we conclude our broadcast week exclusively for you folks with a little bit of the old options oddities. Then back again next week all the way through to another Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.